Welcome to Forex TV's PM Exchange. It's Friday, November 2nd. I'm Remy Hoki. Today we're joined by Boris Schlossberg from dailyfx.com. Good afternoon, Boris.
Hi, great to be with you again.
Great to have you on the show today. Well, earlier non-farm payrolls came in at twice the consensus forecast, and September's figures were revised down. But do you expect to see a revision to today's stronger than expected non-farm payrolls figure?
Probably, because that's been the sort of a modus operandi of NFPs. They come out a little bit better, then they get revised down. But frankly, the number today was so much better than the market expected that it's a significant upside number. And it tells you that there's very little reason for the Fed to cut rates in December, given the strength of the underlying economy, despite the fact that housing and finance are really a disaster right now.
Okay, well, let's talk about the dollar reaction from this morning's report. Euro dollar, sterling dollar, and dollar CAD continue to see new multi-decade and even record highs with dollar weakness. But given the bearish dollar sentiment, when do you expect the U.S. dollar to bottom?
Yeah, the dollar now is the Rodney Dangerfield of the currencies. It's getting absolutely no respect in the market. And it's really quite difficult to say because fundamentally, we had actually very dollar-friendly data this week. GDP was much better than expected. NFPs were better than expected. There is an underlying current of strength in the U.S. economy that's quite surprising, I think, to the market. And probably most of the market participants haven't really absorbed that fact yet. There's still quite a lot of bets on the fact that the Fed may cut rates going forward. There's only one possible scenario that could derail a dollar rebound, in our opinion, in the next week or so. And that could be if the ECB chooses to signal raising rates in December. They aren't going to raise rates in November because they usually never do that, but they tend to always signal forward what they're going to do. And if they come out hawkish this Thursday, then I think that could be another round of dollar weakness, for the near term being. But that's about the only thing on the horizon we see that could further threaten dollar weakness as we go.
Okay, well, we just talked about dollar reaction to event risk this week. In today's session, U.S. equities have paired losses in afternoon trade. But if you could tell us about this week's FOMC statement and what kind of bias you saw from the Fed Reserve.
I think the bias from the Fed was essentially towards the neutral side rather than the dovish side. Mm-hmm. Clearly, they want this to be the last rate cut for the time being. They don't want to have to continuously lower rates because they see the potential inflationary impact and, of course, the very negative impact to the dollar as this occurs. There's very, very real danger that should they continue doing so, we could have a stampede out of the dollar. We certainly have a slow leak at this point, but a stampede out of the dollar would really hurt U.S. financial markets and the U.S. economy because it would be a major vote of no confidence in the currency. So I think the Fed is very, very cautious in trying to pare back any kind of overtly dollar negative sentiment that happens. And that's why, under the best of circumstances, they would like to stay stationary in December, perhaps even through January and February, hoping that the two rate cuts they've done was enough medicine for the U.S. economy. Okay,
well, we just discussed the U.S. economy, and you gave us your expectations for the rate announcement from the ECB next week. But we also do have the BOE and the RBA rate decision. So if you could briefly tell us how you see rate differentials supporting the high-yielding currencies.
Yeah, it's by no means a guarantee that the ECB will stay stationary. They have been making very, very hawkish rhetoric for the last 2 weeks. It's just that we feel, given the situation as it stands now, should Mr. Trichet signal a potential rate hike in December, it would almost certainly take the euro dollar all the way up to potentially 150. And I wonder if both the European politicians and the European industrialists are going to accept that kind of monetary policy out of the ECB. So I really feel they're going to try to be very cautious. Even if they entertain the idea of a possible rate hike, they're not going to communicate it at this meeting. And that could result in a little bit of a euro retrace because of it. The BOE, on the other hand, is, of course, probably going to stay stationary. This week we had Charles Bean from the BOE give a rather hawkish assessment of their interest rate structure, and probably at the very best, the BOE is going to stay stationary for the rest of the year. The economy in England is doing quite well. There's very little reason for them to cut rates at this point. Housing market's still doing double-digit growth, so we see it quite strong. And as a matter of fact, the pound has really been the strongest among the major currencies because at 5.75% rate, it is the highest yield amongst the majors. And is, as I was leaving the office, it was on the verge of breaking the 209 handle. So it's just been a one-way move for the pound. But also, should the dollar begin a little bit of a correction, it becomes vulnerable to potential retrace. And finally, the RBA. The RBA is a story in and of itself. Of course, the story in Australia has been very, very strong. And there's been a lot of feeling amongst market participants that despite the fact that we have an election coming up, the RBA may simply bite the bullet and raise rates when they meet this week. So we'll have to see if that happens. We still think there's a much greater chance that they'll stay stationary and wait until after the election. There is little reason for them to need to raise rates at this point, given the strength of the Australian dollar as it stands.
Okay, well, you mentioned that sterling dollar is climbing closer to the 209 level. So going into the weekend, what levels do you expect to see for the cable against the dollar as well as euro dollar?
I think at this point, 209 and perhaps even 210, because it's such a magnetic number. And typically in the Forex market, once you get very close to very large round numbers, there's such an incredible amount of momentum to want to run the stops there. It's quite possible and quite achievable as the last vestiges of the euro and the sterling rally against the dollar take hold at the beginning of the week. But as we go into the middle and the end of the week, we expect to see a little bit of a retrace and perhaps a comeback off these very, very lofty levels.
Okay, and looking ahead to U.S. data next week, we do have international trade and retail sales in the U.S. But there is a downturn in housing while other sectors of the economy are plugging along. So if you could briefly give us your expectations for the data coming out at the end of next week.
Yeah, the trade data is supposed to be quite friendly because, of course, lower dollar helps exports. If you look at the labor component of the data this week, you would have to say that consumer spending should be relatively okay because as long as wages are increasing, personal spending and personal income are increasing, that should support a mild growth in consumption. So retail sales should also be relatively good for the dollar. Overall, on the data front, there's very little to threaten any potential dollar decline. It's really going to be a question of what the Europeans do and how hawkish they are that may determine forward rates.
Okay, Boris, thank you very much for weighing in on the FX market.
Thank you. Thanks. Nice to be here.
Have a great weekend.
Thanks.
This has been your Forex News with Boris Schlossberg from dailyfx.com. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks saw plenty of volatility in today's session, but the major indexes managed to end up on the day. There is ongoing uncertainty about the financial sector, with concerns that subprime mortgage woes could spread into consumer debt. So not surprisingly, Merrill Lynch, Washington Mutual, J.P. Morgan, and Goldman Sachs were among the biggest decliners. Although this morning's Labor Department report was cheered, stocks were not boosted by the data. Non-farm payrolls saw an upside surprise this morning, with the Labor Department reporting that 166,000 new jobs were created in October. The figures for September were revised down to 96,000 from 110,000 jobs. And the unemployment rate remained steady at 4.7%. At the closing bell, the Dow Jones Industrial Average advanced by over 27 points and at 13,595.10. The tech-heavy Nasdaq gained over 15.5 points to 2,810.38, and the S&P 500 closed up nearly flat with a gain of 1.21 at 1,509.65. Over in the fixed income market, U.S. Treasury bonds were up in today's session. Prices followed equities throughout a volatile trading day. Although economic data came in stronger than expected, concerns about the latest earnings reports in the financial sector weighed on investor sentiment. The benchmark 10-year Treasury note was up with the yield at 4.29%. And in energy, NYMEX crude oil futures rallied 2.6% to end at another record closing high. December crude rose $2.44 to end up at $95.93 a barrel. The benchmark contract hit an all-time high of $96.24 in electronic trading yesterday. NYMEX crude gained 4.4% on the week. And another NYMEX petroleum products December RBOB gas gained 8.97 cents to close at $2.43.29 a gallon. December heating oil added 5.81 cents to close at $2.5704 a gallon. Meanwhile, December natural gas ended the session down by 22.4 cents at $8.413 per million BTU. Over in the metals complex, gold futures rallied, and they soared past $800 to their highest level in almost 28 years. With crude oil rallying and the U.S. dollar weakening, the precious metals saw a big boost. December gold added $14.80 to finish at $808.50 an ounce. Earlier, the contract hit an intraday high of $810.70. Meanwhile, December silver gained 27.40 cents to close at $14.599 an ounce. December copper fell 3.75 cents to close at $3.3250 a pound. And January platinum added $11.90 to close at $1,462.70 an ounce. And December palladium finished up $1.50 at $377.40 an ounce. This afternoon, I'm joined by Bobby Firestone, analyst at Aileron Trading. He'll recap this week's action in commodities prices.
After an early attempt to move lower on the day, the runaway train that we're calling crude oil just continued on the track northward. Now, we've seen a strong rally all day going into the weekend. It's part of that. It looks like people don't want to be short heading into the weekend with the combination of the news-driven events. We have Turkey, and all the stories that you've been seeing for the last couple of weeks. We're getting a lot closer to the possibility of a solution to the situation. So, traders don't want to be short going into the weekend. Very reasonable. Now, the other driving factor I'm seeing continuously brought up in the news around crude is the tight inventories and increasing demand. If you look at it objectively and go beyond the sound bites, it's not panning out to come up with a $95 barrel crude price. So there is a lot of event-driven price movement here and rampant speculation. So I know over the next few days or possibly weeks, I do think that we're going to continue to see the bull run here, but be prepared for a major correction to happen very quickly if certain factors do come into play. Now, gold is rocking and rolling today. Had the highest close since 1980, closing above $800 at 808. That's incredibly strong. Don't know what to say there other than, buy gold. The dollar continues to remain weak, so it makes a lot of sense if your questions about the future of the economy and any other fears that may come to play here as a lot of uncertainty in every market is worked through.
That was Bobby Firestone, analyst at Aileron Trading, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us Monday morning for your latest news update right here on ForexTV.com. Have a great weekend.